On 15th of February 2023, the federal government presented the Finance Supplementary Bill. The objective of this bill was to revive the IMF program, and to do that, the federal government has made several changes within different laws. In this video, we are going to discuss some of the major changes within the law. The first and most prominent change which has been brought in terms of sales tax is the increase in sales tax rate from 17 to 18%. Now this rate has been increased for all items except for third schedule items जिनके ऊपर sales tax charge होता है on the basis of their retail price. In terms of the third schedule items as well, the federal government has inserted an enabling proviso which empowers the federal government to increase the rate anytime. From what I expect, going forward, a notification will be issued to increase tax rate on third schedule items as well. The next change is with regards to federal excise duty. FED has been increased on different items. Some of the items include, for example, duty on aerated water has been increased from 13 to 20%. Duty on cement has been increased from 1.5 rupees per kg to 2 rupees per kg. Duty on sugar and fruit drinks has now been increased to 10% of the retail price. Similarly, cigarettes and international first class and business class tickets will now be subject to duty at higher rates. Now let's talk about some changes in terms of the income tax ordinance. The first change within the income tax ordinance is the reintroduction of advance tax on functions and gatherings. This provision was already there within the income tax ordinance, but it was removed in 2020 through Finance Act. Now this provision has been introduced once again, and owners and operators of marriage halls are required to collect advance tax at the percentage of 10% from the final amount of bill. Next, we have a change in provisions for a taxation on capital gain on disposal of securities. Capital gain on disposal of securities is subject to tax under Section 37A of the ordinance, and tax on such transactions is collected by NCCPL in a specified manner. Now, this change proposes that in terms of transactions which are not executed through stock exchange and are not settled by NCCPL, tax on such transaction will be charged as per Section 37 based on the applicable rates. Now, what does this mean? This means that capital gain arising on disposal of open-ended mutual funds or unlisted REITs will be taxed under Section 37. Previously, this was being taxed under 37A. Now, this is an ambiguity which is created by the proposal, and we expect that further clarification in this regard will be provided going forward. Finally, an advance tax has also been introduced on acquisition of shares of a company other than securities which fall within Section 37A of the ordinance. In terms of this change, buyers of shares in a company will be required to withhold and deposit advance tax at the rate of 10% of the fair market value of such shares which they are buying. Through these changes, the government is expecting to collect an additional revenue of 170 billion rupees. Hope you liked this video. If you have any queries, feel free to drop a message.